Hey everybody, this is Jim at SP500chart.com. It's about 4:15 on October 10th, 2013, and we had an interesting day. But before we look at it, I just want to remind you that the website and the video are for educational purposes only. Nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I'm not a licensed financial professional. I'm just a guy that draws lines on charts. So let's take a look. You know, I just kind of had this sneaking suspicion that that something sort of like this might happen. But before we get into it, I just want to say that the lines on any chart are there to serve as barriers, if you will, or speed bumps. They're just tendencies that are kind of built in to the underlying buying and selling pressure that is kind of built into the market at any given point in time. And that buying and selling pressure can often act differently under different sets of circumstances. And I think that's what we see here. We still see, by the way, our trend lines acting as speed bumps, but what we're seeing differently is with the outlook today that there will be a resolution to the budget crisis. What we see today is more power to get up and over those bumps and to attack some of the areas that we thought we may have left behind. I just want to remind you that, as I mentioned yesterday, we did have this triangle pattern right here, and when it broke down, it made its minimum target. So the triangle worked. The assumption that I was kind of thinking on is that why would we break underneath this turquoise line? And just to remind you, that line has been around for almost a year, not quite 11 months, but almost 11 months. So it didn't seem to make much sense to me that the S&P would break under that line, spend 2 days under it, and that not represent anything other than that little triangle needing to get its little built up selling pressure relieved through some selling. But I have to say, at this point, that is what it looks like. And by the way, hopefully I was pretty clear in the idea that I wouldn't short this market, not yet. And but looking at things, you can see that we started the day, we gapped up. Essentially, we gapped up over both our little gray line and our turquoise line, and we came up against our underneath side of this triangle, bounced back a little bit. I mentioned yesterday that I would expect some resistance around the apex of this pattern. We got a little resistance for about almost half the day around that apex, and then the S&P just powered up over the apex and over this top line, and now we have to consider that it looks like we have recovered from that 2-day dip underneath our turquoise line. Even though that dip was technically significant by being more than 1%, the conditions that created that move simply look to have been resolved. The other thing I want to show you is if we come back here to our top and we snap a line, you can see that that we are also over this line. If we draw this line over any subsequent peak, we're over that. So I think that bodes pretty well. Let's see if we get some follow through tomorrow. And I've added a line on this chart, wouldn't you know it, right here. And I don't know why I'm going to bother doing this, but I'm going to extend that over to the right here, just on the outside chance that that we end up with an inverted head and shoulders pattern as opposed to a head and shoulder pattern, or a shoulder and a head. But we've seen this before. Coming down in a channel, break out, dip, bigger dip, and it's almost like a reverse cup and handle, if you will. And but by the way, a lot of times a cup and handle is really the second two dips of an inverted head and shoulders pattern. This would be the cup, and then you'd have a handle. But lately we've been seeing handles with cups. Either that, or it's a very small cup with a very large handle. So right now, let's just keep this on the chart here, that we have what appears to be some resistance at about right at about our today's close, right at about 1692. Boy, that sure is a far cry from just continuing that move on down and in getting down to the 1600s. That does not look likely right now. So if this is an inverted head and shoulders pattern, or if we get another one of those where we fail to really make that right shoulder, let's measure it. We measure the depth of the head, and since it is a horizontal neckline, it doesn't matter where we put this, it's going to be the same place. We would have a target here of 1740, which is about 10 points higher than our last previous high. Whether or not, and by the way, that is a minimum target. So right now, I'd be real curious to see if we get a dip here, then a move over that line, or whether we just move directly over it. Or, I mean, there's always the possibility that that the deal is off and the market resumes what it did on Tuesday and Wednesday, and that is back to sell-off mode. But right now, it certainly looks like we've seen this before, been there, done that, got the t-shirt. So guys, I'm just going to keep it short and sweet at that. Now that we're over this turquoise line, let's flip that back to support. Let's look at this as resistance. I think we could look at any of these lines up here as resistance too. But if we get over this one, then I think the handwriting is on the wall that we're going to get over the next three, and we're going to get up to 1740. So guys, there's your video for October 10th, 2013. Interesting day. Really interesting day. Makes me feel kind of stupid for having stopped out of my SPY position, but the good news is I've got other longs that are definitely enjoying this strength. So guys, thanks for watching this video. Thank you for your support.